Welcome to Trading Sadhguru. In this video, we are going to discuss possible levels for the coming week, starting from Monday to uh, Friday. So Monday is 17th and Friday is 21st. So we'll be concentrating levels for the upcoming week. Okay, not intraday. Don't just get confused for the intraday levels. Okay, for which we upload everyday video. So most likely, I will upload the video for daily levels for Monday on Sunday afternoon. Okay, so this is for the weekly levels, weekly reference levels. So it's a little bit of larger view compared to intraday view. Okay, so far what Nifty has done. Okay, let us take this pen, and this is a high made in September 2024. Okay, and this is also a lifetime high. From there, the fall has started. So that downward move started. So if you look at from the peak, we are still in the downtrend. If it is a larger view, if you have a horizon of a month or 3 months or 6 months, we call it a downtrend on a larger scale. Okay. In within the week or within a day, you may find both ways move. Like if you look at it this way, so this is a trending down move on a larger time frame. Okay, we expect for the coming week, we expect that this trend continues. We are not going to take any positions which are contrary to the larger trend. So we expect that this down move continues, and at the same time, we also recognize that within intraday or in a span of a day or two, upward moves are possible. Okay, so keeping that in mind, we will discuss both the levels on upside as well as downside. So we expect the market or Nifty to breach this level. This level is around 22,800 level. So once this level found support here, and for the two trading sessions, okay, that is Wednesday and Friday. So this level was acting as a crucial support here. Okay. So is reversal possible from this level? Yes. Market is supreme. Reversal is possible from anywhere. If a market or market participants decide to take the market in a reverse direction, yes, they will take it. Okay, so where should we have a stop loss on upside? That is a question. In case market reverses or market moves upsides or breaks the long term trend of um, going down and tries to move beyond this range. Okay, beyond this range. So here we'll limit our view to 23,400 or maximum 450. We'll consider this as boundary for the down move. So we have decided our bias that the larger trend, which is downtrend, is likely to continue in the coming week. Accordingly, we will see the market going down. In case there is a reversal, we expect that it will give up all the gains that it might make in a day or two. Okay, even if it goes to this level by any chance, we presume that it is going to give up all the gains and move in the natural direction, that is downward direction. Okay, this is the fundamental bias or fundamental approach towards our analysis. Okay, so once we have finished that the boundary, we have set the boundary and upside, till which level it can fall. Suppose there is no up move, market moves downward, or if it moves and then gives up and moves in the downward direction, what levels we can expect on the downside. Okay, for that, if you look at the history, this candle is a election result, parliament elections, union elections. Okay, These are parliament election result day, June 3rd and 4th. Okay, so this big red candle. So presently we are within the body, we are here at this level. So huge movements are possible even prior to the result. If you look at the chart, so there is a huge range to play with. Okay, that's why I marked these two lines, one in orange on the downside, and somewhere we have to draw a reference line on the downward to fix a target. Okay, so here I limit my analysis on the downward side at this level. So this is 21,960. For the purpose of remembering, let us make it a whole number, that is 22,000. Okay, so we are at 22. Today we closed at 22,929. Okay, so this is 22,929. Okay, if at all we move upside, 23,150 will act as a resistance. In case it is taken out, 250, and then 400, 450 max. Okay, but overall, toward the end of the week, we see a down, we assume or we presume a downward move is likely to happen. And in case this level is taken out and Nifty stays below 22,800 continuously for 15 to 30 minutes, okay, continuously below this level, then we can expect a down move. Is it going to go towards 22,000 in a day? No, it may not be possible because the 800 point gap is almost 3 to 4%. So it is very rare to see 3 to percent a down move or up move in Nifty. Very few days you will get it, very limited number of days. So the probability of such a day is very minimal. So let us not assume that in one day it will go, but in over a period of time, it is possible, very much possible. So we limit our downward move to 20. For this reason, we pick the 22,000 number. So in case 22,800 is taken out, so there is going to be a big downward move. Okay, all the way to 22,600 first, and then 22,400 and 22,250, and finally, in case of extreme bearishness, we may see 22,000. Okay, but for the purpose of trading, let us stop at 22,250. Okay, and we draw the lower boundary at 22,000. Okay, so what makes us believe that this trend, downward trend, will continue in the near future also? One is this, from technical analysis point of view, this red trend line which we had marked here, this red trend line from September onward, this trend is continuing, so we expect it to continue further. So what makes us think that this trend is going to continue, or why should we assume that this is why it won't reverse? One more factor if you want me to put before you, just a moment, let me pull down the data. Yeah, here it is. This is FIA data till yesterday. That is, today's data is not yet updated, so not included. This is from Sensible portal. Okay. So if you look at the pattern, see FIA cash net is negative, except for this day. That is also nominal buying is there. If you see the entire February, January, if you want to go below also, you can see. See, even the month of January, there is not a single sight of green numbers. All are red in thousands of crores. So why this is happening? So one reason I believe is the depreciation of rupee against US dollar. So value of rupee is going down compared to US dollar. So that is the reason these foreign institutional investors are pulling out their money. So what could be the reason? The reason is the profits made in rupees, they have to convert back into dollars. So for that, they need more rupees for purchasing $1, which is not good from the conversion point of view. They will get less number of dollars. So their profits will go down in terms of dollars. Okay, that is the reason they are pulling out. Hope someday this pulling out of funds stops and they start investing afresh in Indian market, and rupee also strengthens against US dollars. Then that time we can think of a trend reversal. Okay, till the time we go with the big fellows, we go with the direction in which these institutional investors, especially foreign institutional investors, are going. We will take their side and accordingly trade as a trader. And those are who are investors, they can try to invest at lower prices. What a market was giving, or something you are getting at 100 rupees. If small and medium cap stocks, you are getting it 70 rupees now. So you have a 30% discount. Okay. So if market bounces back to earlier previous highs, you will get a 30% up move in small to medium stocks. And Nifty is around 13 to 14%. Okay, so investors can compound, but don't invest in one go. Have a tranches of money, and at different levels, predefined levels, you can think of investing in stocks. But as a trader, we'll stick to foreign institutional investors, big players who are pulling out of their money and bringing the market down. So we will align our view with them. That's all for now. Take care. Bye bye.